You're watching Retirement Now.
Hi, I'm Ben Bauman. Welcome to Retirement Now, the show that helps you plan the retirement you want. Today we're asking the question, is your retirement able to resist a sneak attack? Then we head to askaprilroberts.com to answer your questions. First, joining me again, April Roberts, and a special guest today, the founder of Roberts Wealth Management, Paul Roberts. April, Paul, welcome.
Ben, great to be back, and I'm so happy to have Dad on today.
It's great to be here.
Well, it's great to have you, Paul. I want to start with you. Tell us how Roberts Wealth Management came to be.
That's actually my favorite story.
Oh, good.
Obviously.
Yeah.
But in 1993, I had a CPA firm after 22 years as a career CPA. Mm-hmm. And I began to see clients come in year after year of substantial wealth and substantial income, mm-hmm. not make money in the stock market. Notice no capital gains, no profits, but they kept throwing money at it. And I said, something's wrong with this picture.
Okay.
Why do people keep throwing money at this? And I don't see a lot of profit. So I had determined at that time people were just buying things. They didn't really have a strategy. They didn't understand their risk. And I felt like a firm was needed, a wealth management firm, to help people realize those things, especially in retirement.
Okay, so the average investor just thought the stock market is where I need to be. So they were, as you said, throwing money in there, not seeing a lot of returns. So you started Roberts Wealth Management, April, then you came along and some other family members as well. When did Roberts Wealth Management truly become a family business?
Well, I like to say that Dad tricked me into the business back in 2008. And then when my siblings saw what we were doing, they were kind of called into the business too. So it's really a passion for all of us.
Sure. Yeah.
But back in 2008 was a bad year for most people financially.
Yes, it was.
And it was a bad year for me personally. I was going through a divorce. And at that time, Dad wanted to introduce me to what he was doing. And I was a litigator, worked for big corporations. So I kind of came in and cleaned up messes. And that gets a little stressful and going through a divorce. When I saw what Dad did and how he helped people and helped them plan for retirement so they didn't have problems in retirement, I just found it very appealing. I wanted to get in there and help people plan and get ready for retirement as well.
So you're okay that you were tricked into doing this back in 2008?
I'm very grateful for it.
Absolutely. You know, we talked about sneak attacks at the beginning of the show. What are we talking about? April, I'll ask you, what are we talking about with sneak attacks? What is it, and what's maybe one that people need to be watching out for?
Well, Ben, this is a great question because most people don't realize that planning for retirement is different than investing earlier in their life, and they may need to talk to someone who specializes in this area. So every day, Dad and I are sitting down with people doing retirement planning, so we see a lot of these sneak attacks. And one that kind of sticks out in my mind is fees. Most people don't really understand what they're paying in fees. Now, everyone gets paid, but you have to understand how the fees are structured, how much you're paying, so that you can make a good decision about if you're getting the appropriate services to merit the fees.
Okay, so Paul, why don't people understand truly what they're paying in fees? Are we just not paying attention? Are we not looking? Or how does this work?
Even if they looked, it would be rare that they would know because you have to kind of have a lot of financial background to understand most disclosures required under securities laws. They disclose that.
Right.
But then there's fees that are kind of, I don't like to use the word hidden, but they're just not required to be disclosed.
Okay.
Simple as that. And they have no way of knowing those or how to go look for them or to find those type fees. So they never really actually know their total cost.
And so is it really a big deal though? Do these fees really add up over time in retirement and really have a dramatic impact?
Well, Ben, I'll give you my lawyer answer. It depends.
Okay.
So it's important for people to see what they are so they can make a good judgment.
Right.
Some financial vehicles, the fees are very steep and they're hidden and complicated. So you absolutely want a second opinion. And surprisingly, what we're seeing, because we analyze accounts all the time, is some high fees in 401ks. Most people think their fee structure is low in 401ks,
Right.
and it is in most, but we're actually seeing 1% to 2% of kind of hidden fees in some of these 401ks or non-disclosed fees.
Wow.
So it's really important for people to have the second opinion and analysis.
Absolutely, and you can certainly see why. Thanks to you both. And we're not done yet. When we come back, April and Paul talk about another culprit that might be launching a sneak attack on your retirement. Could have a dramatic impact on the returns that you're seeing. Then we head to askaprilroberts.com to answer your questions. First, though, here's a special offer from April and the team at Roberts Wealth Management.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a correction? Now is a great time to get a no-cost retirement review with April and the team at Roberts Wealth Management.
We believe planning for retirement should be taken very seriously.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives to ensure you don't outlive your income in retirement. Plus, stress test your portfolio and perform a risk assessment of your current retirement accounts.
It's one of the most important things you can do. It's about planning for your future.
Call Roberts Wealth Management now to get started on your no-cost retirement review with April and the team at Roberts Wealth Management. Call now.
Welcome back to Retirement Now. I'm Ben Bauman, and I'm here with April and Paul Roberts of Roberts Wealth Management, serving clients throughout the greater Houston area. We talked about the sneak attack that fees can have on someone's retirement. What's another sneak attack that people might not be aware of?
Well, Ben, one of the biggest stealth problems with retirement is inflation. And when you think about inflation, even though it's not being talked about a lot right now, but if you combine that with the new problem of longevity, which is a nice problem to have, people are living longer,
right.
Combine inflation over that length of time, it really has to be an important component of anyone's retirement plan.
Okay, so inflation in and of itself, over the short term, maybe not that big a deal. But when you're talking about 25, 30, 35 years, inflation can be a big deal, I guess, right, Paul?
It can be a very big deal because it doubles about every 18, 19 years.
Okay.
But you could spout those statistics out to people and it doesn't register till you give them an example. For example, my first job, I sold 24 cents a gallon gasoline.
Oh, really?
Yes.
I'd love that.
Yeah, wouldn't we all?
Love that. Well, April, if you recall, our first home you were born in actually cost less than my last car. And the swing set was extra.
And so inflation has to be accounted for. How do you do that, April, when it comes to putting together someone's retirement plan or retirement strategy? How do you account for it?
Yeah. So Ben, I can't emphasize how important this is, and it amazes me that I even have engineers coming in with their retirement spreadsheets and
Really?
they're not properly accounting for inflation. And another thing is taxes. We'll talk about that in a second. But it's really important, number one, to make sure your retirement plan accounts for inflation. So we run all plans at 3% because that's what it's averaged since 1900. Second, we want to make sure that your plan is for a long time. People kind of balk when we're planning for them to be 95, 100 years old.
Right.
But honestly, I have a client who's 97 still driving to bingo every Thursday night. So that's our job to make sure they're taken care of. And the third thing is having an increasing source of income. Most people today are savvy enough to realize they need sources of income in retirement, but they don't realize if that's the same amount. Let's say you have a pension and it looks great when you retire at 65. Well, at 85, that same pension buys half as much. So it's important for us to have increasing sources of income in retirement.
Okay, yeah, great thoughts on that. You mentioned something I want to come back to, taxes. How could taxes be something that is a sneak attack on retirement? Aren't we always thinking about taxes, always focused on taxes? How could that sneak on someone's retirement?
Because most people don't think about taxes till April 15th.
Well, that's true.
So they're not always thinking about it. But what concerns me now as an advisor is that people getting used to this idea of this low tax environment we're entering here. But we don't know how long that's for. How long are you retired? Hopefully 25 to 30 years. So we like April likes to say, we have 10-year tax planning, in 10-year increments.
Really?
So yes, in retirement, because it's not what you make, it's what you keep.
Yeah, absolutely. As a CPA, I know you saw that firsthand during your career in preparing people's taxes and doing their accounting work. So all these things can be things that maybe are outside the realm of most people's thoughts when they're heading into retirement. Fees, inflation, taxes. That's why it takes planning and it takes sitting down with someone who does this day in and day out. And so you see it, you know it's there and how to plan for it.
Absolutely, Ben.
Here's how you can contact April, Paul, and the team at Roberts Wealth Management. Stay with us.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a correction? Now is a great time to get a no-cost retirement review with April and the team at Roberts Wealth Management.
We believe planning for retirement should be taken very seriously.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives to ensure you don't outlive your income in retirement. Plus, stress test your portfolio and perform a risk assessment of your current retirement accounts.
It's one of the most important things you can do. It's about planning for your future.
Call Roberts Wealth Management now to get started on your no-cost retirement review with April and the team at Roberts Wealth Management. Call now.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
In today's Roberts on Retirement, April sheds some light on a strategy to help us survive market volatility. April?
Let's look at the benchmark of the stock market, the S&P 500. Most of us are familiar with that, and it's what most financial companies follow. They try to keep up with what the S&P is doing, which is actually very difficult to do. If we went back in a time machine to September 30th, 1998, and we invested $100,000, we can see that it will grow until we're hit by the dot-com crash in 2000. And what was the advice we were hearing?
Write it out. We're in it for the long haul.
That's right. This was that blanket advice we heard, and for the most part, that's what everyone did. They followed that advice and rode it into the ground. Eventually, the market started to catch back up. But it took the average person not 1 or 2 years, but 6 to 7 years just to recover the losses and get back to even. And then what happened? 2008. Once again, we take a big hit. Here's what that $100,000 was 11 years later. It's been up, it's been down, but here it is, right back to $100,000. Now, over those 11 years, did the stock market stay the same? No, it didn't. There were periods of time that the market gave us gains and other times that it took those gains away. The real question is this: if we're not locking in our gains while we have them, are they really ours? No. I'm going to show you a different strategy. One that we use for some of our clients for a portion of their portfolio. And if you don't have a plan for downside protection, I really believe this might be a good strategy for a portion of your assets as well. Here's a chart that looks at the past 17 years of the stock market. The red line is the S&P 500. The green line shows what would have happened with an investment of $100,000 in this particular vehicle. On day one, the floor goes beneath your principal, but your $100,000 is protected. Now, look what happens when the market goes up. You go up as well. Notice that you don't go up as much as the market, but you are still participating in the market gains. And the gains lock in each year. And once we've earned that gain, we never give it back. So back in 2008, our clients in this vehicle didn't participate in those dramatic market losses. You're not going to make as much in the up years, but when the markets go down, you're not being subjected to those losses either. If you take a look at the market for the last 30 years, that will shed some light on this. This is the S&P. It dropped 47% here in 2000 and 2001. Now, if we move forward to 07 through 09, it dropped 57%. This vehicle typically comes with a time frame, usually 5 to 10 year span, but you do have the ability to access up to 10% per year if you need to. Again, as good as this is not where you put all of your money, but it could be a good option for a portion of your portfolio. We feel with the current state of the stock market, managing downside risk is the most important part of our client's retirement plan. What is your plan in managing downside risk? Do you have one?
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a correction? Now is a great time to get a no-cost retirement review with April and the team at Roberts Wealth Management.
We believe planning for retirement should be taken very seriously.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives to ensure you don't outlive your income in retirement. Plus, stress test your portfolio and perform a risk assessment of your current retirement accounts.
It's one of the most important things you can do. It's about planning for your future.
Call Roberts Wealth Management now to get started on your no-cost retirement review with April and the team at Roberts Wealth Management. Call now.
When it comes to your financial future, what's the value of an objective opinion? As someone looking for financial guidance, you have choices. There are thousands of captive financial advisors who work as employees for large national companies. There are also many independent financial advisors who aren't bound to any given company, investment strategy, or product. So what's the difference? And why does it really matter to you? Consider this. If you walked into a doctor's office with a sore throat, a bad cough, and a high fever, you'd expect that doctor to assess your symptoms, do a thorough diagnosis, and ultimately hand you a prescription written to cure your particular ailment. In other words, you'd expect the doctor to consider all the medications available and give you his or her best thinking on what's best for you. On the other hand, if that doctor opened the cupboard and only had 3 or 4 prescriptions available, most patients would immediately raise an eyebrow, suspicious that they might not be getting what was really in their best interest. The same may be true for your finances. If your financial advisor is an employee who is contractually bound to represent a given insurance or investment company only offering their products, while there are literally hundreds of others available, how can you be sure that you're being offered what's best for your situation? You don't walk into a tailor or a seamstress shop to get clothing off some rack. You go for a custom-tailored fit. And with something as important as your financial future at hand, don't you expect the same? We believe you deserve an objective opinion. We think you deserve to consider more of the available options. And we believe your financial future is worth a custom-tailored prescription designed to help you feel confident for the days ahead. If you'd like a second opinion on your current retirement strategy, simply contact our office today.
Welcome back to Retirement Now. I'm Ben Bauman, here again with April and Paul Roberts of Roberts Wealth Management. It's now time to hear from you in this week's AskAprilRoberts.com section. I know you guys enjoy this. Are you ready for a couple of questions?
Always.
All right, let's see what we've got here. Today from Renee in Cyprus. Can you explain the term rebalancing? I keep seeing it in retirement planning articles, and I'm not sure I know what it means.
So Renee, rebalancing refers to some other terms that you may not understand as well or know what it means. Asset allocation and diversification. So what we're talking about is your growth assets, making sure you're properly diversified in different types of investments or asset classes. So what happens is, let's say that the stock market's doing well. Well, your stocks may outgrow other portions of your investment portfolio.
Oh, I see.
And then your portfolio becomes unbalanced, as they call it. And so what we want to do is bring that back to the middle.
What is the danger in an unbalanced portfolio?
So the danger is, let's use the same scenario where the market's running up. Well, let's say the market has a pullback or a correction. Then you suddenly find out that you're unbalanced and your portfolio maybe gets hit a little harder.
And that's not when you want to find that out.
No, absolutely not. And you really want an investment manager who's actively rebalancing for you so that you don't have to worry about it.
Okay. Here's another question. This is from Jim in Pearland. How often should I talk with my advisor? I really only talk to mine when I have a question. Is that normal?
I don't know the exact statistic on whether that's normal or not, but I can tell you one thing. It's not normal in our office at all, because we believe in over-communications. We believe in over-teaching. Our whole theory is if you have a person in front of you with a good heart and a good mind and good family values, generally a good person, and you give them the facts, they're going to make the right decision for them and their family.
Okay. So you, as an office, as a firm, are reaching out to your clients with information that they need.
Absolutely.
Yep, all the time, Ben. In fact, Dad and I do educational dinners for our clients quite often. And they're not public seminars like we give as well, where anyone's invited to come and learn about retirement. But we have private events just for our clients and their friends and family, because we want them to constantly be reminded what we're doing with their retirement plan. Because at the end of the day, Dad and I, my sister, my brother, we didn't earn that money, they did. And it's for them and for their families. So the more they hear and understand what's going on and what we're doing to keep their plan going, the better they feel in retirement, and they're also better educated to ask the right questions.
Wow, okay, that's great. Here's one more. This is from Gary in Tomball. I'm 62 years old. My wife wants me to retire and start collecting my Social Security. I'm not really ready, and I'm not sure we have saved enough for retirement. I would like to get on the same page with my wife without starting World War III.
So we hear this a lot. In fact, sometimes we joke that sometimes we become marriage counselors. And not really, but part of our job is facilitating this conversation and helping families to make decisions that are right for them.
So this is common for the wife and the husband maybe to not be in agreement.
Yeah, in fact, there's a statistic that 73% of couples do not agree if they have a written retirement plan or not. So that's kind of crazy for us, because that's what we do every day. You either have a written plan or you don't. In fact, it's pretty cool because our plans are interactive, so they can log on and see their retirement plan at any time once they're clients with us.
If you have a question, you can visit askaprilroberts.com or call the number on your screen. Now, what you've heard today is really just information unless you take action. So why wait? Call now. We hope to see you again next time. For April, Paul, and the team at Roberts Wealth Management, I'm Ben Bauman. Have a great day and an even better retirement.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a correction? Now is a great time to get a no-cost retirement review with April and the team at Roberts Wealth Management.
We believe planning for retirement should be taken very seriously.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives to ensure you don't outlive your income in retirement. Plus, stress test your portfolio and perform a risk assessment of your current retirement accounts.
It's one of the most important things you can do. It's about planning for your future.
Call Roberts Wealth Management now to get started on your no-cost retirement review with April and the team at Roberts Wealth Management. Call now.
When it comes to your financial future, what's the value of an objective opinion? As someone looking for financial guidance, you have choices. There are thousands of captive financial advisors who work as employees for large national companies. There are also many independent financial advisors who aren't bound to any given company, investment strategy, or product. So what's the difference? And why does it really matter to you? Consider this. If you walked into a doctor's office with a sore throat, a bad cough, and a high fever, you'd expect that doctor to assess your symptoms, do a thorough diagnosis, and ultimately hand you a prescription written to cure your particular ailment. In other words, you'd expect the doctor to consider all the medications available and give you his or her best thinking on what's best for you. On the other hand, if that doctor opened the cupboard and only had 3 or 4 prescriptions available, most patients would immediately raise an eyebrow, suspicious that they might not be getting what was really in their best interest. The same may be true for your finances. If your financial advisor is an employee who is contractually bound to represent a given insurance or investment company only offering their products, while there are literally hundreds of others available, how can you be sure that you're being offered what's best for your situation? You don't walk into a tailor or a seamstress shop to get clothing off some rack. You go for a custom-tailored fit. And with something as important as your financial future at hand, don't you expect the same? We believe you deserve an objective opinion. We think you deserve to consider more of the available options. And we believe your financial future is worth a custom-tailored prescription designed to help you feel confident for the days ahead. If you'd like a second opinion on your current retirement strategy, simply contact our office today.